Good evening. Today, we will be covering the post-market update dated the 16th of August, 2024. The two Indian benchmarks, the Nifty 50 and the Sensex, ended the holiday truncated week on a high note on August 16th, as investors rejoiced, easing fears of a US recession. This comes after a wave of US data this week going from inflation to jobless claims and retail sales, all pointing toward signs that the world's largest economy stands safe from a possible recession, with the US Federal Reserve likely to achieve a soft landing. At close, the Sensex was up 1,330.96 points, or 1.68% at 80,436.84, and the Nifty was up 397.40 points, or 1.65% at 24,541.20. Top Nifty gainers included Wipro, Grazim, M&M, Tech Mahindra and Tata Motors, while losers were Divi's Labs, SBI Life Insurer, Dr. Reddy's Labs. Talking about the corporate segment, we have shares of RHI Magnesita, makers of special refractory products, rose 6% on August 16 after Q1 financial year 2025 results showed record EBITDA margin, which expanded to 17.5%, helped by recent acquisitions. We are pleased to report that we have delivered the highest margins since the completion of acquisitions over a year ago, said Parmod Sagar, MD and CEO of RHI Magnesita, adding that while end-user industries face challenges from cheaper imports and rising costs, RHI Magnesita sustained strong margins. RHI Magnesita, formerly known as Orient Refractories, had acquired High-Tech Chemicals in October 2022 and Dalmia Bharat Refractories in January 2023. The stock has risen 3% in the past 6 months, underperforming the Nifty 50, which rose over 10% during the period. RHI Magnesita's Q1 financial year 2025 revenue fell 7% on quarter to 878.76 rupees crore, driven by an 8% decline in volume. This drop in volume was due to subdued customer activity, weighed down by an intense heatwave, elections, increased steel imports, and lower exports. The company's net profit for the June quarter came in at 72.88 rupees crore in the quarter ended June 2024 as against a loss of 257.89 rupees crore during the previous quarter. A stronger product mix and a one-time high-margin order boosted gross margins to 45%, up from 43% in Q4 financial year 2024. EBITDA for the June quarter rose 4% sequentially to 154 rupees crore. Paras Defence and Space Technologies Ltd's shares hit a 5% upper circuit at 1,208.35 rupees apiece after the company's associate company, Controp Paras Technologies Private Limited, secured a 305 rupees crore order from Larsen & Toubro. Paras Defence shares have gained 66% in the past 6 months, outperforming the Nifty 50, which gained 10% during the same period. Paras Defence, however, has been giving negative weekly returns for the past 6 weeks. The 305 rupees crore order involves the manufacturing and supply of 244 units of the Site 25 HD electro-optics system. The Site 25 HD EO system is expected to enhance the capabilities of L&T's CIWS program, which is crucial for naval defense. Additionally, the order includes charges for an extended warranty and an integrated logistics support package, all to be used in L&T's close-in weapon system program. Paras Defence will fulfill the Indian content requirements of the order through a separate contract to be issued by Controp Paras Technologies. The order is expected to be executed within a time frame of 47 months. Paras Defence posted its June quarter earnings on August 5, which showed that the company's consolidated net profit for the quarter rose 147% year-on-year to 14.9 rupees crore and revenue from operations rose 73% year-on-year to 83.6 rupees crore. In the year-ago period, the company's net profit and revenue stood at 6 rupees crore and 48.3 crore, respectively. Paras Defence is a private sector company focused on the design, development, manufacturing, and testing of a wide range of defense and space engineering products and solutions. The company serves for key segments: defense and space optics, defense electronics, heavy engineering, and electromagnetic pulse protection solutions. Shares of Hindustan Zinc tanked nearly 8% in opening trade on August 16 as the offer for sale, through which promoter Vedanta Limited will divest a 3.17% stake in the company, opened for subscription. The OFS, active from August 16 to 19, will feature a base offer of 1.22%, with an option to sell an additional 1.95% if oversubscribed. A total 3.17% stake will be offered at a floor price of 486 rupees per share, implying a 15% discount from Hindustan Zinc's previous closing price. The issue will open for non-retail investors on August 16 and for retail investors on August 19. The stake offered by Vedanta was updated after the company initially proposed to offload 2.6% equity on August 13. According to Hindustan Zinc's latest shareholding data, the government holds a 29.54% stake, while Vedanta owns 64.92% of the company. The news of Vedanta's stake sale comes after a Bloomberg report revealed the company's plans to raise $2.5 billion to help manage its substantial debt. According to the report, the company recently paused its plans to sell its steel business after raising 8,500 rupees crore through a qualified institutional placement (QIP) of shares. Hindustan Zinc reported a debt of 11,178 rupees crore as of the end of the June quarter, taking Vedanta Group's consolidated debt to 78,016 rupees crore. Back in May, Hindustan Zinc also announced plans to pay 4,225 rupees crore in interim dividends, a move intended to support the parent company, Vedanta, in its deleveraging efforts. Shares of Ola Electric Mobility surged 20% to 133 rupees in the afternoon on August 16 after receiving its first-ever buy rating post-June quarter earnings that were released earlier this week. HSBC initiated coverage on the newly listed company with a price target of 140 rupees, suggesting a potential upside of 26% from Wednesday's closing price. Though HSBC has a conservative stance on EV penetration in India, the brokerage believes Ola Electric is worth investing in due to sustained policy support, ability to reduce costs, and a favorable risk-reward profile for the battery venture. Ola Electric sold 49% of all the electric two-wheelers in the June quarter, and HSBC noted that the company has ambitious plans to manufacture most of the necessary EV components within India, including the battery. The company reported its Q1 earnings on August 14, posting a net loss that widened to 347 rupees crore due to higher financing costs that nearly doubled to 67 rupees crore compared to last year. Ola's overall expenses rose to 1,849 rupees crore from 1,461 rupees crore last year. August also marked Ola's entry into the electric motorcycle segment with the launch of Roadster series on Thursday. The bikes will be available in the range of 75,000 rupees to 2.5 rupees lakh in three variants, Roadster, Roadster X, and Roadster Pro, each of which will have sub-variants. Signpost India Limited in daily time frame is trading around 265.42 points with a change of 20% and is trading with a net volume of around 874.438,000 shares. The share price is trading above its moving average 239.58, which is a good indication for the stock. While shares are trading with a relative strength index of around 58.39. Vinny Overseas Limited in daily time frame is trading around 4.92 points with a change of 20% and is trading with a net volume of around 8.243 million shares. The share price is trading above its moving average 3.66, which is a good indication for the stock. While shares are trading with a relative strength index of around 91.01. Afflex Limited in daily time frame is trading around 676.70 points with a change of 19.53% and is trading with a net volume of around 3.936 million shares. The share price is trading above its moving average 592.08, which is a good indication for the stock. While shares are trading with a relative strength index of around 70.49. For the stock recommendation we have, Equitas Small Finance Bank Limited looks good and can be bought at 83 rupees, keeping a stop loss of 77 rupees and a target of 88 rupees.
You can reach us via phone, WhatsApp, or email using the information listed on the screen. Thank you for joining us today. If you found this video informative, please give it a thumbs up, and don't forget to subscribe for more financial insights. And, as always, if you have any questions or topics you'd like us to cover in future videos, leave them in the comments section below. Until next time, happy investing.